Okay, thank you. Jag heter David Robertson. Jag pratar bara lite svenska, but probably best for everybody that I do this in English. So let me give you a little background on myself because it's relevant to how we got here today, and then I'll dive into the subject of the talk. I got my doctorate back in 1990 at MIT, and after that went to what my father called the dark side and worked for McKinsey & Company for 5 years in the US and in Sweden. I spent a wonderful year in Göteborg. And then went to work for a number of different enterprise software companies. Bond, the ERP company, if you've heard of them, I worked for them for a year and a half. And was CEO of a small procurement software company in 2001. We sold that off, and I was looking for the next thing to do, and I called up a friend of mine who was on the faculty at IMD, and I just asked him of interesting companies to go talk to and work for, and he said, what about us? And I thought, well, that, enterprise software in 2001 was a difficult field to be in, and I thought I could take a year and, wait till the market recovered after a year or two and then go back and get a real job again. But now, 5.5 years later, I'm probably ruined in terms of employability, and I find myself kind of an accidental academic. So what I did when I got the job at IMD, I had no research program. So I called up my old friends at MIT, and I said, let's go research something together. Let's go find an interesting IT-related business topic that we can go talk about. And so we went out and we started talking to CIOs. I handled the European part of this research, and MIT did the US part of the research. And we started talking to CIOs about the issues that were keeping them awake at night, that they wanted us to study, that they wanted some answers to. And we kept getting back this issue of architecture. And we thought at first that this wasn't a business issue, that it was clearly an IT issue, but it wasn't a business issue. But the more we talked to people, the more we realized that it really was a business issue. That there was something about the fundamental structure of companies that was preventing them from executing their strategy. And if IT prevents you from doing what you want to do strategically, then it's absolutely a business issue. And so now it is, let's get the technology working. Now, 5.5 years later, we've talked to 150 companies. Excuse me. We've talked to 150 companies in the US and Europe. We did a quantitative survey of 103, and basically we kept going till we got 100 good data points. And what I want to do is talk about what we think we've learned about enterprise architecture. And again, we wanted to approach this from a business standpoint. And so what I'd like to do today is to do this as kind of a role play. That I will be the chief architect of a company, ABC company, and you are the management team. Right? And so we have our management team meeting, typical fully packed management team meeting. And on the agenda for the meeting is 45 minutes to talk about enterprise architecture. Okay, so I will talk to you, and you will be the top management team of this company, the business management of the company. Now let me give you a little bit about your role so you understand who you are before we're diving into this talk. There are 3 business units in your company. The first of these, Alemania, is 11 really separate businesses. They operate very differently. It was grown largely through acquisition, but they serve the same customers. Right? So there's a common customer set. These are complementary businesses serving the common customer set. The second business unit, we'll call Britannia, is organized by countries. So this is a retail product business. There's one central manufacturing area selling basically the same products in 19 different country organizations. And then third, and this is the oldest part of our business, is the Catalonia business. It's an old centralized business, lots of legacy, very old line, functionally organized. Okay? So that's who you are. You are the top management of this diversified conglomerate. So now kind of close your eyes. Let's get in the mood. You're in the management boardroom, so feel the leather of your chair and listen to the ice tinkle in your 14-year-old scotch and smell the cigar smoke, and let's start the presentation. Okay, so thank you for coming, for giving me the chance to come visit you. My name is David Robertson. I'm the chief architect of ABC Company. We have met once before, by the way. I came and talked to you 3 years ago about data security on BlackBerries, if you remember. But as far as I know, that's the only time this group has ever talked about architecture for any length of time. And what I'm going to talk to you about is enterprise architecture. What is it? First, we'll spend some time just defining that term and why ours is broken. And because of that, why we're not able to execute our business strategy. Why we can't do what we want to do and are losing to our competitors strategically. And then third, what it is that we can do together. What's your responsibility? What's our responsibility in terms of fixing that? So, one way to think about architecture, the architecture of the company is like the structure of a car. You can buy a fast, fun-to-drive sports car. It corners well, it accelerates, it's great on twisting roads. Or you can buy a big off-road vehicle that holds your whole family and camping gear and never gets stuck. But try and take that big off-road vehicle, the sports utility vehicle, on a twisting mountain road at high speeds, and you'll see that there's limitations. There's some things it does well and not so well. The structure of the car affects what it can do well and not so well. Well, companies are the same way. That inside each of our businesses, there is a structure. There's a set of business processes and IT systems, and they have a structure. And that lets our company do some things well and other things not so well. And enterprise architecture, we would define as the organizing logic for the business processes and IT systems in a company. Now, within each of our businesses, we have problems with our enterprise architecture. It is preventing us from doing what we want to do strategically. Within Alemania, as you know, there's very different business units offering complementary services to a largely common customer set. Now, these businesses operate very differently, but we're getting complaint calls from customers. You know, we'll get a call from a customer saying, right now, outside my door, I've got 5 different sales reps from your company, and every month, at the end of the month, I get 10 different invoices, and I want it to stop. I want one person I can talk to, and at the end of the month, I want one bill. Now, as you know, we've tried to fix this, but basically we created a small central group whose job it is just to massage Excel spreadsheets and rekey data and pretend that we're one company, but it's a hellish nightmare of a job, and we're not doing very well because fundamentally the structures of the business are different. The way we do order management, the way we have product catalogs, the way we price things. Right? So the structure of our company is preventing us from doing what we need to do to satisfy our customers. Within the second business, Britannia, as you know, this grew more organically. We'd send a bright person into a country like France or Italy. We'd expand into that country. We'd let them make the decisions they wanted to make. You know, they're selling the same products in each country because we make those all out of the same factory. But the systems and the processes in each of these countries is really different. They're operating differently. Now, there's a couple of problems with that. One is that we've had some responsiveness problems, that our competitors will introduce a product, and it'll be very easy to introduce that in some parts of the business, but in other countries, it'll take a while. We'll even have to reprogram our ERP systems before we can respond to that competitor's product. The second is that we've got 19 different staffs, each of which is subscale and inefficient. But the biggest problem is that our customers have realized that they can actually shop around the different countries. So the big multinationals that buy our products are going from Italy to France to the UK to Sweden and getting the best deal. Right? They're actually bidding us against each other, and because we're so independent, we don't know about it. Right? So again, the structure of the business is actually hurting us competitively. And then last, Catalonia in the telecommunications business. You know, we've entered recently the retail broadband business. And if you remember, back in the late 90s, the market was telling us that the pieces of Catalonia were worth more apart than the whole company was worth together. And so we're preparing to spin those off, and they were all going their own direction, making their own decisions. And now, as we try and provide an integrated service across the different businesses, we're finding that we're doing a lot of rekeying of data, a lot of massaging data in spreadsheets, and we've created something that is really not scalable in a very fast-growing part of the market. And so let me stop there. Do you understand that we have this problem with the structure? Our businesses do have a structure, and because of that structure, we're not able to do what we want to do strategically. Well, then the question is, what's wrong? I mean, how could a management team make this mistake, let this happen? Is there something wrong with our management? And the reasons why this has happened are different from different parts of the businesses, but they're very natural things that happen to a lot of companies. I mean, first, within Alemania, since we grew through acquisition, we had very good companies that operated in a very rational way independently, but now our customers are asking us to act in a very integrated way. And so what worked apart doesn't work together. Within the Britannia business, if you remember, we did the big ERP change back in 1998 in Britannia, and we had this very standardized way of operating across the businesses. But I've got a picture here of a coral reef, and let me explain the analogy. Take your favorite car. Just do a mental experiment for me. Take your favorite car, be it a Mercedes, a Volvo, a Lexus, whatever you want. Drive it off a pier. Take 19 different identical copies of that car. Drive them all off a pier into the ocean. Let them fall to the bottom of the ocean. And for a while, they look like 19 identical cars. But then small animals attach themselves to it. They live and they die. They leave their shells behind. And then a few years later, instead of 19 identical cars, we've got 19 different coral reefs. Well, that's what's happened within Britannia. There's been lots of turbulence in the industry. We'll do lots of urgent things within the country. These projects, these 90-day urgent projects, will leave behind their code on the legacy systems. And it grows and grows and becomes less and less flexible. And soon, we've got 19 different ways of operating instead of one standardized way of operating. And that's what's happened within Britannia. And then the last business unit, if we look at Catalonia, and we're really honest with ourselves, we really never had a plan, did we? We really never had a plan for what the architecture of the business was. And it's ironic that the management team of Catalonia met out in Silicon Valley, California, and took a tour of the Winchester House last year. And I'll tell you all the story of the Winchester House. The Winchester House, Sarah and William Winchester were the heirs to the Winchester rifle fortune in the late 1800s. Winchester sold rifles to both sides in the American Civil War, which was a very good business to be in. They're quite wealthy people. But they actually had a very tragic life. They had a baby who died 9 days later, and then the husband, William Winchester, died of a wasting disease a few years after that. And Sarah Winchester, the wife, became convinced that she was being haunted by the spirits of the soldiers killed by the Winchester rifles. And so on the advice of her fortune teller, she moved from the east coast of the United States to the west coast of the United States. And for the next 38 years, she kept over 50 carpenters busy every single day building her house. She bought a 6-room house under construction, and by the time she died 38 years later, it had 162 rooms. Although every time they count, they come up with a different number. What she did was she was convinced that if she kept building, she'd leave behind the spirits in the rooms that she had built before. And so every morning she'd come down and she'd have a piece of paper with a sketch, let's build here today. And the next day it was a corner of a tablecloth, let's build over here, let's build this over here. And it's this amazing mix of rooms. There's 1,257 windows. There's windows that look out onto walls. There's stairs that go up into ceilings. There's chimneys that end in the middle of rooms. And if you remember from the tour, if you don't have a tour guide, you have a hard time finding your way out of it. And it has every kind of heating technology that you could imagine. It has fireplaces, forced hot air, steam heat, et cetera. Every technology supporting it that was available at the time. But it was a very good metaphor for how Catalonia has built its systems architecture. Because really what we did is we responded to the competitive threats at the time, built what we needed at the time with no overall plan for where we were going. And when you don't have a plan, this is actually how the CIO, the one we just fired if you remember from Catalonia, would draw the architecture of the business. That every time we get a critical business need, we'll build a new silo for it. So we'll have a new platform with a different application, the data tied up in that application. We've got some hardwired together so we can do touchless processing of critical transactions. And then there is a data warehouse on top of that, but it's for reporting. We really can't do much beyond that with that data. As he said, it's a miracle it all works. Well, it's our belief that depending on technology, miracles is not the way we want to run our business. And what's ironic about it is that we've taken a very cost-focused approach to building new systems capabilities within Catalonia and the other businesses. So each project has had a very rigorous ROI hurdle that it had to deliver against. But because of that cost-focused, every project becomes a little bit more, adds a little bit more legacy to the coral reef. The coral reef gets more and more complex. We've become less and less flexible, and it's harder and harder to do any new capability in the future. You've probably seen this diagram before, that the cost of just maintaining our systems is steadily driving out the ability to do any new capability. And that 63% is our number as well as the industry average for what percent is spent in IT in a typical corporation on just keeping the current systems running. But the bigger issue is that we can't do what we want to do strategically because of the architecture of our business. Now, what's ironic is that we've tried to actually align IT strategy with business strategy, and that's made things worse. That's actually made things worse. And let me explain what has happened and how we can prevent that. So it's not the idea, it's not the theory of alignment that's wrong. The theory of alignment is right, that you as the management team should decide what the strategic priorities of the business are. That will generate some initiatives, some business initiatives with an IT component, as all business initiatives have these days. And then we build that capability, and that adds to the foundation of the business and makes us more and more competitive as we move forward. But what actually happens is somewhat different. That what we get from you in terms of strategy, let's leverage synergy to be more competitive and closer to the customer, isn't specific enough to really give us any guidance. Or it's very specific, like let's enter the Chinese market within the next 6 months. But neither give us the long-term view of the business that we need to guide our IT efforts. And because of that, we're always chasing the strategy. Right? Strategy is a guess about the future. It's a guess about what's going to happen to the competitive dynamics of the business and where the business is going to go. And because of that, it's inherently wrong. Right? I mean, we're going to change the strategy, evolve it as we go forward. And so IT is always chasing. We're always racing to do the thing. By the time we do deliver something, the strategy has changed. We're adding more legacy to the coral reef. We're making things less and less flexible, and nobody's happy about the situation. In fact, we're getting less and less flexible. So then the question is, what is your responsibility? What do we need from you to give IT the right guidance? And there's a human analogy that will illustrate this. That when you have kids, that they learn to breathe. They learn to eat. They learn to walk. And there's a lot of initial trial and error, falling over as they learn to walk, and tears, and there's a lot of learning that happens. But after a while, those skills become second nature, and you do them without thinking about them. And then you build on those, and a child learns to run and ride a bicycle. And again, there's lots of tears and trial and error and learning, but then those skills become second nature, and you do them without thinking about them. And then as you rise to greatness in some field, like a professional bicycle rider will know things about riding in a peloton or cornering or going downhill that would be difficult for any of us, but for that person is second nature, and they focus on higher order skills. Well, we, like any business, aren't blessed with a single human brain that coordinates all our activities, and so we spend a lot of time in our companies just reconciling, fixing, expediting things at the very basic level, and not focusing on the higher order skills of understanding customer needs, developing innovative new products. We're spending a lot of time at this very basic level and not up where we should. And so what we believe that we should be doing together as a management team, together with IT, is defining something called the operating model. And the operating model is different than the strategy. The operating model is the answer to two questions. What are the activities that we need to perform repeatably, flawlessly, and efficiently? What are the activities that we did yesterday, that we're going to do today, that we're going to do tomorrow, that are the core of the business, that are not going to change? And how standardized and integrated do we want them to be? Right? Now, what the operating model is, where strategy is a guess about what's going to change in the future, the operating model is what's not going to change. And that's the kind of guidance we need. We need to define what are those critical things we need to do repeatably, reliably, and well. And we as IT can make sure that we can do them, and that will give us a platform that we can build on to grow the business. I'll talk in a second about how standardized and integrated, what those things mean. One CIO, the CIO of JCPenney for what it's worth, defined those as the sacred transactions in the business, and that's a good word. Those key things that we need to do well. Standardization doesn't need to be the same as integration. Standardization is just doing things the same way wherever we are. A good example in this research that I read recently was Marriott hotels. If you've gone to a Marriott hotel, you check in and they ask for your information, your address and passport information. And then if you go to a different Marriott hotel the next night, they ask for the same information again. That's because they're standardized. The systems in the hotels are the same, but they're not integrated. They don't take that data, integrate it in a single database that they update overnight. An even more extreme example is McDonald's, right? The point of sale systems at McDonald's are the same wherever you are, but you don't expect them to remember that you want fries with that hamburger or not, right? They're standardized but not integrated. And standardization is good because if you do standardize, if it makes sense to standardize, then you can reduce your costs, you can increase your efficiency, you can measure and compare across different parts of the business, and steadily improve the business, and you can actually accelerate innovation. And I see some kind of quizzical looks on that standardization and innovation, do those really go along, are those really, aren't those incompatible? But I'll tell you a story about that. eBay, the big auction giant, when they entered Germany, they entered it through acquisition. And they bought the German auction company. And what eBay does is they not only standardize, but they centralize. They ripped out all the systems in Germany. They put all the operations on the server farm in California, and they operated things in the standard eBay way. But they started getting complaints in Germany. They said, it doesn't work as well as it used to. Right? What used to happen, let's do a search and we want to say buy a Trek bicycle. Well, then we'll get back the search results for the auctions that match at 99% level, 98% level, 95, 93, etc. So we'll get the auctions that match the search term. Well, the way things used to work in Germany was you get the auctions for Trek bikes that end in 2 minutes, 3 minutes, 5 minutes, half an hour, 1 hour, 2 hours, 1 day, 2 days, etc. Right? The auctions that were ending soonest come first. And people like that better. So the German operations manager, he calls up the US and says, it's not as good. Your system is not as good as our system was. And the US people say, well, let's remember who acquired whom, and we know what we're doing, so you just go work. But they argue back and forth. The German guy doesn't give up. He finally flies over to the US. They argue about it for a few days. The US decides to try it, and sure enough, everybody's happier, right? The people who are looking to buy things find the auctions that are ending and get their things they want faster. Of course, more things get sold. eBay makes more money. Everybody's happier. And so they implement this system across all of eBay, whether it's UK or Germany or US, all of eBay. And so by standardizing, by having one standard way of doing a process across all the different parts of the business, we get a lot more ideas from those different parts of the business about how to improve that business. There's an increased governance challenge about deciding which ones we're going to implement and not. But in terms of boosting ideas for improvement, we get a lot more of those. So it can really boost innovation if we can manage it well. But it can be difficult, right? I mean, different parts of the business may be different, and we don't want to have a standard way of reaching all these different customers. So it can limit local flexibility in a way that actually could hurt our business. And it can be very politically difficult to replace perfectly good systems with a new corporate standard. One of the largest efforts at standardization in the world that's still going on is the Nestle Globe project. It's a €2 billion transformation of all the systems across all of the countries in which Nestle does business. And the former head of the Globe project Chris Johnson drew this graph, and he said, this is the performance of our different business units. Some are performing very well, some are not performing very well. Now, once we put in Globe, we're going to raise the average standard significantly. It's going to make a huge difference. But right now, my challenge is Germany. My challenge is this third one here. My challenge is to convince Germany to pay to implement a system that's going, rip out their standards, the systems that they have now, put in the new Globe standard, and it will actually hurt their performance. That's a tough challenge. But if we don't do it in all the countries, then we don't get that benefit. We don't rise, and over time we're going to incorporate improvements, and everybody's performance is going to rise above the levels of Germany. But Germany right now has to pay to implement the standard system that's actually going to hurt their performance. That's the challenge of standardization. Integration is doing things differently, but presenting a common face to the customer, suppliers, or other partners. Right? And so, for example, MetLife, they're an insurance company that grew through acquisition, and they have life insurance, auto insurance, health insurance, etc., which are very different businesses, but customers calling up want a single point of contact. Right? They want to be able to answer the basic questions about whatever insurance they have and know that they're a very good customer and have multiple types of insurance from MetLife. Integration is good because it links efforts. We can get some standardized information, some transparency across the business, present a single face to suppliers or partners. But it can require some common data definitions, and putting those in place can be very difficult. And so there's a 2x2. Thank you. There's a 2x2 matrix here, and what we have to decide is basically where does the business fit? How standardized, how integrated do we want to be for those sacred transactions, those things that we did yesterday, that we're going to do today, that we're going to do tomorrow. And let me give you a couple examples. Let me talk about a couple of little mini case studies. ING Direct. ING Direct is a direct bank with a little bit of a different business model. They operate in 8 different countries. So they started in Canada, and then they rolled it out to Australia, France, Italy, US. They're in the UK now. They're just starting up in Japan and Spain. And what they offer is they're your other bank. They don't offer that transactional account that lets you pay your bills every month. They're just a place that you can put your savings and get better interest rate from savings. They also do very simple home loans or personal loans. They don't have branches. They don't handle much cash. The accounts they have are very low transaction accounts. And so they're able to keep their systems and processes very simple. And so their cost structure is about 1/6 that of a typical branch bank. Now, the way they talk about so that they really are an example of replication, of high standardization, but no integration. Because of banking laws, if you're a bank in France, you can't take the data from customers and store it anywhere but France. It has to live in France. And so they have to replicate their standard architecture everywhere around the world. They can't centralize their operations in any way. But they need to save money to implement their business model. They need to mostly have standardized systems and processes. It can't entirely happen. Home loans are different in different countries. Treasury systems are different between Europe and North America. Some things have to be different, but they want it primarily the same. So they have a service-oriented or modular architecture. And the CIO draws the structure of the business, the entire structure of the business, on one page this way. And what you notice about this is how modular it is. That every member of the top management team, every business manager, can talk about this diagram and talk about how important it is that we don't put in any silos that would ruin this. Because if we do that, we remove the ability to kind of plug and play different modules. Take out the home loan module in one country and put in a different one. Because as you know, the real cost of systems is not the license cost. Right? That's 1/5 of the total cost. It's really connecting things, integrating them with the other systems. And we need those standard interfaces between the different parts. if we're really going to implement, or rather ING Direct needs it if they're really going to implement the architecture that they need to save money, to support their strategy. And by the way, this one-page diagram, this core diagram we call it, we found to be a great exercise. We've gone to the different parts of the business of ABC, and we've required the CIO to produce a one-page diagram. Because as you all know, you've sat through these presentations where the architecture is listed on 40 pages. It's a lot harder to say it on one page, but it's necessary if you as a management team are going to be able to explain why we're doing some of the things that we're doing to fix the architecture of the business. Another example is Delta Airlines. Delta emerged from its recent troubles as the most efficient of the hub and spoke carriers in the world. And what they did as a management team to achieve this is they sat down. They realized that their systems were really broken, that they didn't have the information that they needed to run the business. And so what they did is they sat down as a management team and they had 60 meetings. And I'm not saying that it's going to require that many meetings of us, but they felt it was that important to really define what were those sacred transactions, what was the operating model of Delta, and put it on one page that every management team member could talk through. And at the bottom here is the customer experience. Right, that you go through reservations and ticketing and boarding and in-flight and baggage. And up top is loading the aircraft, is the operations of the business. So loading the aircraft, monitoring the flight, unloading, cleaning. And in the middle is the data that you need to run the business, the different parties that need to access that data. And then, of course, business reflexes is reporting and analysis. And employee relationship management is another key process. So they've put on here the key processes of the business, the key data that they need to run the business. And every member of the management team can talk about why the different projects in the company were necessary to make this work. And because of that, they're operating more efficiently than their major competitors. One more example, MetLife. I talked to them about them before. They grew through acquisition. They have very different businesses. Life insurance is very different than auto insurance and home and fire insurance, property and casualty insurance. And so their one-page diagram shows all these different processes on the left side going through a common portal out in an integrated way to the parties that need to access that information. Right? So their one-page diagram really emphasizes that need for integration, not for standardization. Now the question is, what's the right position for our businesses, for Alemania, for Britannia, for Catalonia? Where do they belong? And the answer is that there's no best place. We went through this exercise for Alemania. We mapped the most important processes in the business, and there's some like financial consolidation that really need to be standardized and integrated. But most of them, we really want different around the business. The businesses, the 11 different business units in Alemania are very different, but we need that integrated point of contact so our customers feel like they're getting a single person who really understands them and can meet their basic needs. Right? So Alemania is up in the upper left. Britannia, on the other hand, is more like ING Direct. They're down in the lower right. There's no need, since the business units mostly serve independent customers, to have that integrated central database of information. There's no need for all that expense and coordination of the different types of data. So we can really replicate a common structure around the different parts of the business. Excuse me. Catalonia, on the other hand, since they are such a centralized model, they really do need to be both standardized and integrated. And if we move up a level, overall, we have made a decision as a business that we are going to be a diversified conglomerate with a very lean corporate headquarters. And so there's no need to take these architectural efforts across the whole business, across Alemania, Britannia, and Catalonia. Right? So your answer to the question is actually different depending on which level you look at it. In fact, if we go into Alemania, they've decided that there's 4 or 5 of the business units that really are fairly similar in the way they operate, and those business units are better done in a more unified way, both standardized and integrated in a more unified way. Okay, so what we're arguing is that instead of strategic alignment, Instead of trying to always guess what's going to change in the future, and IT always running to catch up, what we need to do together is define the operating model. That management together, facilitated by us, will help in this process. We'll ask you for what those critical, those sacred transactions are, those things we did yesterday, today, and tomorrow, how standardized and integrated we want them to be. That will let us do our job in terms of designing an architecture. And that architecture will inform how we design solutions, because we can design the solutions right or wrong. And we can do it either way. And it's just as easy often to do it right. But if we have that architecture as a guide, as a compass, if you will, then we can do it right, and every project is going to build our foundation. And instead of reducing our flexibility, we'll get what has been called happy surprises. And this term comes from UPS. Mike Eskew, the CEO of UPS, the big package delivery company, they went through a huge effort because they actually had different package data standards in the US and Europe. And they went through a big effort to try and define, to try and decide rather whether they should have a single definition of the package data and a single centralized storehouse for that. They finally did it. It was a huge, expensive transformation. But once it was done, Eskew said, now, when we meet as a management team, the CIO, the IT group, is always bringing us happy surprises. Because of this capability that we've built, did you know that we can do this? We can enter this new business. We can provide this information to our customers. It's let us get ahead of Federal Express in a way that we couldn't do before. We never expected it to happen, but now that we have a good foundation to build on, we're actually much more agile than we used to be. And I get those kind of happy surprises from IT all the time. Now, I know you guys are used to surprises from IT. They just haven't been very happy ones. So let me take you through the journey that we're going to go through over the next couple of years, because making these transformations is not simple. But we've benchmarked our competitors. We in the IT community, we talk to each other at conferences. We kind of know what's going on in the different companies. Everybody's wrestling with this. It's not any easier for anybody else. So going back, enterprise architecture is the organizing logic for the business processes and IT systems in a company. And the architecture for a company falls into one of four categories. All of our businesses, they started out as silos, collections of separate departments, each making their own decisions, deciding about IT on a very project-based way. Each project had to return ROI. But then what happened, and this has happened for most of our companies, is that we realized that there's a lot of money to be saved by standardizing just the base platform level, that we don't need 12 different types of desktops and 3 different web servers and 3 different database servers, that we can actually standardize at the platform level, save a tremendous amount of money. The systems development, the support, the maintenance effort, the costs go way down. We're still making separate decisions across the business about the applications and the data standards, but we're doing them on a more standardized set of platforms and saving a tremendous amount of money. The business case for that was easy to make, and like I said, we've made it in most of the parts of the business. But what was important, what we learned about this, was not the technical improvements that were made, not the cost improvements, but the governance improvements that were made. Moving across these phases is really a governance challenge, because this is the first time that IT said no to the business. This is the first time that IT said, I know you'd like to have the apple, but you can't. It's not part of the corporate standard. If you bought it, then it's yours because you're going to pay for it. Right? And so we set up a very basic, simple governance. And for the parts of the business that have moved to the next stage, where we're starting to integrate and standardize the basic operations of the business, that challenge is 4, 5, 6 times harder than the previous transformation. And if you don't have that trust set up between IT and the business, then you'll never get there. Right? So that transformation, the next stage, the optimized core, what you have to do is you have to decide, say, if you're going to have standardized processes and systems that support those processes, then whose processes are you going to put in place? Who's the business person responsible for deciding how to improve that standard process across the business? What is it that how are you going to do that? And often, when we've done this, the business case has been made on overall performance. We just can't operate the way we used to operate. And lastly is modularity or service-oriented architectures, where we're able to take those layers of data and processes and systems, and we're able to break them up into pieces, kind of like Lego blocks with standardized interfaces across those so we can swap out one and put in another. Now there's an easy way to remember this, and since it's right before lunch, I'll give you the pasta theory of enterprise architecture. That these can be compared to types of pasta. That over on the left is spaghetti. That everything's tied to everything else, everything's hardwired together. You try and change one thing and everything else is affected by it. It's still spaghetti in the second stage, but at least it's on a standard hardware plate. In the third category, you're taking the data from the applications, from the platforms. You're taking the data out of those applications that it's often wrapped up in. You're layering it better, so you're moving from spaghetti to lasagna. And then in the fourth, the service-oriented or modular architecture, you're starting to break those layers up into pieces with standardized interfaces to them, so you're moving from lasagna to ravioli. And for all the hype, a recent study about this by some MIT and IMD people found that only 6% of the companies are really over in the far right. That for all the hype about it, that in terms of moving the company and managing it in a real modular way, service-oriented way, there's only 6 companies out of 100 that have done that. And the reason why is that you can't skip a stage as you do this transformation. If you skip a stage, you fail. And that's because there's some very basic learning that has to happen among the business management and among the IT people about IT as you move across these stages. And each of these transformations for large companies like ours takes years. So the very first stage is about basic governance, setting up some standards, enforcing those standards, working together between business and IT. Often it's at the CFO level to make those work. The second transformation, though, is about deciding how you want to run critical parts of the business. Do you want those back office operations, the order management process, pricing, product, purchasing, et cetera? Do you want those standardized in a single way? Who's going to manage those? What's the critical data that we need to run the business? You know, how standardized and integrated do we want to be? And making those decisions and enforcing them and going out to the country business units, say in Britannia, and saying, I know you used to be responsible for running this, but you're not anymore. We're going to run it. We're going to decide how to run that part of your business. That needs a lot of business credibility. And that's why that transformation has been so difficult for us and for other companies. But until you've done that, you can't really do a modular architecture. You can't really be service-oriented because you haven't made the decisions about what the critical data is to run the business. You can spin off all the web services you want, but unless you really understand what the critical data is needed to run the business, you've set up some business management practices for who's going to be responsible for that data and decided about the operating model, about how standardized and integrated you want things to be, you'll never be able to really do that effectively. And so for all the hype in terms of the way it overall is managed at the top level of the business, this group found only 6% of the businesses over on the far right. But the good news is the benefits start right away. And we've seen this as we move from the left side to the second, the standardized technology, that the responsiveness of IT goes up. So we start to deliver much quicker. And also the strategic business impacts. If you ask the business management team how helpful IT is in helping to execute the strategy of the business, the rating for that goes up and continues to go up as you move through the stages. And finally, the managerial satisfaction. How happy is the business with IT? One thing, by the way, our experience is not unusual in terms of the turnover of our CIOs. That in this research of 150 companies in the US and Europe, this team found that in almost every situation, they found 2 CIOs that had actually taken a company more than one stage. In general, companies tend to fire the CIO and hire a new one for each transformation. And that actually makes some sense, right? That the skills needed by a CIO to work with a business to take a company from the far left side of business silos, going back. Business silos to standardized technology are more about project management, setting basic technical standards, doing basic governance. The transformation from the second to the third and even the fourth requires much more of a business-focused CIO So here you often see the CIO that has the second title of VP of Strategy, VP of Logistics. And maybe it's that person that comes from the business, has a great deal of business credibility, and has as a right-hand person a more adept technical person. So you often see the CIO turn over for each of these different transformations. There's not good data in terms of the transformation from the third to the fourth because there's so few there. The other thing that tends to happen is that the costs decline. That this is controlled as you'd expect for type of industry, which is why it starts with 100% on the left. Telecommunications and financial services spend more on IT than manufacturing companies. But as you move from the first to the second stage, standardized technology, your costs drop by an average of 15%. They drop another 10% as you move to the optimized core. And they drop not because the standardized or centralized systems, enterprise systems, the cost of those changes much, but rather because of the local systems, that mess, that kudzu, the coral reef, if you will. The cost of that declines pretty dramatically. So this will also have an effect for our governance and how we want to manage the business. And I'll tell you a little story about a company that we benchmarked called Toyota Europe. Toyota Europe had a huge challenge. They had a transformation every bit as big, in fact, bigger than what we had that they had to do. Their sales in Europe were growing fairly dramatically, from 385,000 units in 1995 up to over 1.2 million units by 2010. But they had grown up, as Britannia had, as separate business entities with only a very small central unit that was basically financial consolidation. But the problem that they were having is they're finding out that they really didn't have any good information about inventory, about sales demand centrally, and so they weren't able to manage their operations in the way they wanted to as a company. So if you, say, went to a Toyota in Geneva and you wanted to buy a green Corolla, that car could be right over the border in France and they'd never know it. Or if you wanted to get your Corolla fixed, the spare part that was needed could be right over the border, but they'd never know it. And so what they decided as a company was that they needed greater transparency over the business. They needed to understand more about the supply and the demand chain. And if possible, they'd like to become more efficient and share best practices across the business. But the way the chief architect of Toyota Europe, Peter Henkens, described it, he said, we were here in 1999. We're a diversified, decentralized company. We had to become here. When he went out to the top, he went out to the different parts of the business, prepared a presentation, went to the top management team, and said, we need this transparency. Do we all agree? And the head of the business said yes. So it became a decision by the top management team that they had to become more integrated, much more transparent, sharing of information across the business. And it would be nice, it would be desirable if they could also share best practices and standardize their operations across the 29 different country operations. But he said, once we made this decision about what was necessary and what was desirable, it changed the conversation completely. We would go out to the businesses and say, look, we have a standard system that we want, our standard Oracle system. And we think you should implement it. We think it's better than your systems. You're telling us that your systems are better. Well, that's fine. Just give us the data that we need to run the business. And then we can talk in a few years when your systems are getting near the end of their life about swapping in the standard corporate systems. And he said, often they'd go away and they'd say, yes, our systems are better, but they'd come back in a few months and they'd say, well, we really don't have the data we need to run the business, so let's talk about the standard systems. But sometimes they come back and they deliver us the data, and then a few years later we talk about swapping in the standard system when theirs reached end of life. And what we learned from Toyota, because Toyota had such a major transformation, but this is a company whose DNA is all about continuous improvement. Small steps, small improvements to steadily make things better and better. So how does a company that wants to do things in a continuous improvement way do a major transformation of the business? There's something that we think we could learn from here. And what we learned from them is engagement. That you still need governance overall. You need a cooperation between IT and the business. But you also need project management, a good standardized way of operating your projects so that there's regular insertion points So you can make sure that things are done in an architecturally consistent way, coherent way, that they're following the architecture that they've designed. And then in between is linking mechanisms, ways of connecting what's decided at the top management team with what's happening in the project so the projects don't drift off and we get more of the coral reef syndrome and the projects drift off and things get worse and worse over time. And there's lots of different possible linkages. I won't go through these in the interest of time. But what they did first at Toyota, they went out and they surveyed the projects and they said, it seems like what we really need is this transparency across the business and, if possible, a sharing of best practices. Is that true? And they got agreement from the top management team about the operating model of the business. And then they installed a single process. They used the IBM Rational Unified process, but there's lots of good standardized ways of carrying out projects. And then they put in some funding mechanisms so that the first project to, say, use a new database, they decided they needed this integrated database. So the first project to use it didn't have to pay for the whole thing. They set up a central funding mechanism so that they could fund that first project and then get it back from later projects. And then he did something very interesting, the chief architect. He took all his centralized architects and put them out on projects, all except just a few. And he changed their reward system. And he said, as a project architect, if your project fails, then you fail. If your project succeeds, but it's not architecturally compliant, then you've almost met expectations. If your project succeeds and it's architecturally compliant, then you've met expectations. But if your project succeeds and it's improved the design of the central architecture, then you've exceeded expectations. And the bonus differences for those three levels is quite significant. And so they put into mechanisms to steadily improve the design of the central architecture, right? To continuously improve it and give feedback about what's going to work and not work. And they always talk about just-in-time architecture, that architecture is a compass, not a blueprint. And then they found that they weren't getting involved early enough, so they changed the project process to insert themselves earlier to prevent those projects that are failures before they start. And overall, they found that instead of 26% of the projects being architecturally compliant, 93% were. They asked the business project managers, does the architecture help you achieve your strategic goals? That measure went up by 76%. These are very rough measures, but at least they're trying, they're measuring. And overall, the performance of Toyota went up for this and many other reasons. But what Peter Hinkins says is, if you have good engagement, right, if you've defined your operating model, you've set up standards for what the architecture should be, then you can do things just, it's often no more expensive and usually cheaper to do it in an architecturally compliant way. And he said, one of the things he's most proud of is he said, I took my budget down to almost zero. When I started, we had a couple of major projects that we had to do, but now all of our architectural efforts are done within business projects. And we can make the same promise to you as the management team, that within a few years, our budget will be zero, that we will do all the things we want to do architecturally within business initiative, existing business initiatives. And so just to finish off, just to summarize, there is a structure. Our businesses have a structure, and that structure is called enterprise architecture. Because of that structure, and it's nobody's fault, it's just natural things that have happened to a lot of business, that structure is preventing us from executing our business strategy. And it's true for all our competitors. It's true for 60% of the businesses surveyed by this IMD and MIT team. And what we need to fix that is for you and us together to define the operating model of the business. Not a guess about what will change, but a guess about what won't change about the business, that core of the business. And then we can go off, design the architecture, and steadily start to begin transforming that architecture. It's going to take years, but it's taking years for everybody, and the benefits will start right away. And once that foundation's in place, then we've got to start to change our governance, the way we work together, to continuously improve upon that. So thank you for taking the time. And with that, we'll open it up to questions. Yes?
Thank you very much. Thank you very much, Robert. Any questions from the audience here? Please go ahead.